viewers. I'm here to share with you about market update. Today we're going to be talking about the Goldman Sachs projection for the U.S. economy in the next half of the year. In a report, Goldman Sachs said the probability of a U.S. recession drops to 20% in the coming year, and the Fed's rate hike will be the last. Fed's July's rate hike will be the last. Goldman Sachs on Monday said it is now bullish on the prospects for a soft landing for the U.S. economy, citing encouraging inflation data. In a report on Monday, Goldman Sachs chief economist Han Tae-Soo lowered the probability of a U.S. recession in the coming year to 20% from 25%. The main reason for this downward revision is that the recent data have strengthened our confidence that a fall in inflation to acceptance levels will not require a recession. While that probability is still higher than the post-war average of 15%, Goldman's new forecast is well below Wall Street's current median forecast of 54%. The Fed's aggressive rate hike over the past year have raised concern that the Fed could be a drag on the economy as it struggles to cut inflation to its 2% target. But the latest CPI shows that the U.S. inflation has fallen to 3% from 9% in the last June. It said encouraging CPI data would not be a flash in the pan as fundamental signals highlighted the imminent arrival of further disinflation. Used car prices are declining against a backdrop of increased vehicle production and inventory. Rental inflation is still a long way from keeping up with information on median rental asking prices. Labor market continue to rebalance, and job vacancies, resignations, labor shortages, and nominal wage growth continue to decline. At the same time, Goldman Sachs has also reduced its focus on the inverted U.S. Treasury yield curve, which has traditionally been a reliable indicator of an impending recession. He said that perception could be misleading in the current cycle, in part because the Fed is likely to cut interest rates in response to slowing down in inflation, rather than a recession. In addition, this inversion may also stem from obvious pessimism among investors. In addition to the U.S., Goldman Sachs noted that soft landing is also possible in developing economies like Brazil, Poland, and Chile. And they all have experienced sharp declines in inflation, but employment or output has not been hit significantly. For the U.S., Goldman Sachs expects the Fed to raise interest rates only once, which is in line with investors' expectations. However, while a recession can be avoided, there is still a possibility of some slowdown. He said, "We do expect some deceleration in the coming quarters, largely due to an excessive slowdown in disposable personal income, especially after the repayments on student loans in October and a drag on reduced bank lending." Jesus wrote, but easing financial conditions, a rebound in the housing market, and a continued boom in the factory construction suggests that the U.S. economy will continue to grow, albeit at a below trend pace. Thank you for listening. Don't forget to subscribe and see you next episode.